Hello, accounting and business management students. This series of episodes of accounting are made exclusively for you. Before I give you the guide on this series, I would like to tell you in advance that this is composed of 17 short episodes that will help you strengthen your foundation in accounting. The videos that you're about to watch are made assuming that you don't have any knowledge about the topics to be discussed, or what do we call zero-based lectures. If you want to skip this video guide, go ahead and go near the end of this video. There will be suggested videos there that will lead you to the next episodes. Actually, you can always do that. You can go near the end of each of the videos in this series to go to the next episodes. So go now and happy learning. But for those who wanted to be guided and those who wanted to know what to expect in this series, please stay and let's have the title, content, and duration of each of the videos after this. Before we go through each of the episodes, here are the objectives of this series. 1 is to let you appreciate the role of the accountants. 2, to let you understand the meaning of the accounting by heart. And number 3, to teach you the foundations of accounting, especially accounting for service entities, accounting for merchandise entities, and business mathematics, time value of money. I promise you, if you master these 3 topics, higher accounting will be much easier. Now, let's go to each of the episodes. So we have episode number 1 entitled, What is Accounting? Who are the accountants? And what do they do? So there are a lot of misconceptions about the work of an accountant, like they only work in a bank or they are mathematicians and a lot more. It's time to clear those misunderstandings by watching this episode. The duration of this episode is just 13 minutes. Episode 2 is all about step 1 of the accounting process, which is the transaction analysis. Specifically, this video talks about accountable transactions and their effects on the equation A is equal to L plus C, or assets equals liabilities plus capital, and a lot of other concepts. This lecture is only for less than 30 minutes of your time. We have episode number 3, which talks about journalizing or recording of transactions and more. And aside from how to make a journal entry, this episode answers the following. What is debit and credit? What are the elements of the financial statements? How to classify assets and liabilities? What is the chart of accounts? What are the contra accounts? What are the adjunct accounts? And what are the source documents? All of those questions will be answered in just 29 minutes. Next is episode 4. The title of this episode is Posting of Journal Entries to the Ledger and Preparation of the Unadjusted Trial Balance. This video talks about the step 3 and step 4 of the accounting cycle in a comprehensive but understandable manner, with an illustrative problem also within the video. The duration of the lecture is only 12 minutes. Episode 5, we have its topics, which are the adjustments, accruals, deferrals, as well as asset, liability, expense, and revenue methods. This video specifically talks about adjustments for depreciation, allowance for doubtful accounts, accrued revenues, accrued expenses, deferred revenues which can be accounted for using liability or revenue methods. We have deferred expenses and its recording using asset and expense methods with the complete concept, computation, illustration, and straight to the point summary. The video is 16 minutes long. Episode 6 is completing of worksheet. This will help you learn how to fill up a worksheet in a very short period of time. This tutorial is only for 19 minutes. Episode 7 teaches you financial statements preparation, namely statement of comprehensive income or income statement, statement of changes in equity, balance sheet or statement of financial position, cash flow statement, accounting notes and disclosures. There are also bonus topics like what is a slide and transposition error. And all of these are taught for 20 minutes only. And for 21 minutes, we have episode 8, which talks about the adjusting and closing entries, post-closing trial balance preparation, and reversing entries. This lecture details how to perform the step 7, 8, 9, and 10 of the accounting cycle and why do we need to perform them. So step 7 to step 10 are the adjusting journal entries are journalized and posted, closing entries are journalized and posted, preparation of the post-closing trial balance, and preparation of the reversing entries. And that's the end of the step 1 to 10 of the accounting cycle for service entities. You can also say that this is the end of season 1 of the series. Season 2 is coming up next. We are now on the season 2, which talks about the accounting for merchandise entities. So episode 9 talks about the accounting for sale of merchandise, sales discounts, and sales returns, freight and shipping terms also. So if you want the specifics, this episode discusses the following topics. Number 1, three activities of merchandising entities that makes it different from service entities. Number 2, income statement of service entities versus merchandise entities. Number 3, accounting for sales. Number 4, rules on transfer of ownership of goods. Number 5, FOB shipping point versus FOB destination. Number 6, accounting for sales returns and allowances. Number 7, cash discounts versus trade discounts. Number 8, accounting for sales discounts. Number 9, accounting for freight out. And number 10, freight prepaid versus freight collect. These topics are discussed in 23 minutes only. And we have episode 10, accounting for merchandise purchases, purchase discounts, and returns, freight and shipping terms also. This video provides the story behind the use of accounting titles found below. So we have the account titles purchases, purchase returns and allowances, purchase discounts, freight in, and purchase discounts lost. While the lecture progresses, rules on transfer of ownership of inventories will also be discussed, as well as the meaning of different shipping terms and freight terms. The duration of the video lecture is 16 minutes only. Now, we are on episode 11, which talks about the inventory count using specific identification, FIFO or first in first out, periodic and perpetual methods. This episode focuses on the concept and importance of inventory count and the computation of merchandise inventory ending using specific identification, first in first out, periodic, and first in first out, perpetual. All of those are discussed in less than 19 minutes only. Next is episode 12, entitled Inventory Count, Last In First Out, Weighted Average and Moving Average. This video is part 2 of the inventory count topic. The objective of this episode is to teach you how to compute the merchandise inventory end using the last in first out method, both periodic and perpetual. So we have weighted average and moving average also in less than 15 minutes only. Now we have episode 13, Perpetual versus Periodic Inventory System. This video specifically explains the importance of merchandise inventory end in getting the cost of sales and gross profit amounts, especially under periodic inventory system. This video also thoroughly discusses the recording difference of periodic inventory system and perpetual inventory system. The lecture duration is less than 12 minutes. The last episode for accounting for merchandise entities is episode 14. This video compares the accounting cycle or accounting process for service versus merchandise entities in just 16 minutes. Now, that's the end of the merchandising series. We will have the last set of episodes after this. We've come now to the last group of episodes which talks about time value of money. We have here the 15th episode which discusses simple interest versus compound interest plus future value concepts. This lecture is focused on letting you learn the concepts of simple interest, compound interest, future value of one ordinary annuity, future value of one annuity due or annuity in advance, with comprehensive illustrations of course. The episode's duration is less than 22 minutes only. Next is episode 16, which discusses future value part 2. And the most important topic here is how to do the interpolation. This video answers the following two questions: how to get the amount to be invested, if the rate of the return and the desired future value is given, and how to get the missing rate of return through interpolation. And we have the last episode on this series, episode 17. Episode 17 talks about the present value as a whole and the application of the present value concepts in the interest-bearing and non-interest-bearing promissory notes. The lecture lasts for 45 minutes only. So those are the contents of this series. Now if you want to ask, how many minutes does it take to watch all of the episodes non-stop? Answer, 350 minutes only to strengthen your foundation and use it as a weapon in higher accounting subjects. So what are you waiting for? Start right now.